Good morning, everyone, and welcome to the weekend update. Last week, just one of those really boring weeks, unless you were playing one of those high flyer algo stocks like the Hawaiian oil company that was being pushed on the pipeline shutdown on the East Coast. Possibly because a lot of US maps, as someone pointed out, has Hawaii just underneath Florida. So that makes sense on why BRN was such a big mover on the pipeline shutdown. I'm joking, of course. It's just been that kind of market. Volume very, very low, very slow out there. All the action really is in the big cap stocks. And, I found myself, I believe that was one of my slowest trading weeks in a long time, sitting in the highest cash level I've been in a long time. It's just not a swing traders market right now. And, for the last year plus, it was one of the best swing markets ever. So as I keep continuing to say, when things slow down, it's to be expected. Right now we are seeing them create the next group of stocks that traders will be able to trade. All the action is in the higher price stocks, or everyone is chasing the same scanner that's telling them what to chase. And usually these scanner stocks that we're seeing moving are ones that are being set up to do offerings or just had offerings and they need to unload those shares. But we're looking at the Dow chart here, and you can see that big sell-off early in the week, but the 50-day moving average held. Sell volume, it was okay, but we did get a nice big bounce back again on Friday. What do we need for this market to turn? We need to stop seeing these gigantic up and down moves. It would be nice to see a dead large cap market, because that would very likely bring the volume into other stocks. Let's look at AI here real quick. AI is my proxy for the speculative market. This was AI in the middle of February at the top of the mania, 176. And then we know what happened over the next 2 months. The market sucked when it came to speculative stocks. In April, we started to see this sideways pattern. Market looked like it was ready. Things were bouncing nicely. And then over the last 2 weeks, everything got its nuts kicked in and volume disappeared again. And the slow grind lower that we've seen in so many stocks throughout the market, when you back out the likes of Home Depot and these other mega caps up 40%, this is kind of what a lot of stocks look like out there. Small cap index. Small cap index, it's in a range. It's not breaking down, but it's just sitting there waiting for that volume to come back in. Now, I will say on this bounce over the last couple of days, we saw most volume we've seen in a couple of months come in. So when I was looking around at charts, getting ready for today's video, I mentioned it on Friday too, I believe, that I was starting to see a lot of bounce setups getting ready. It wasn't, Fridays, especially when the market's up big, I don't like going shopping for new plays. You never know what nonsense is going to happen over the weekend. But a lot of charts are setting up very, very nicely going into this week. I'm positive going into this week, but I'm still going to be doing my stance that I've been doing for the last couple of months. Highest cash I've been in years in my swing account. And I'm going to see what the flavors of the day are. I want to miss some plays. I want to see plays continue to run without me. I want to be a little bit cautious, because remember, when we go back to this AI chart, when things looked ready to rock and roll, and you recall AI was breaking out at this level, and we started seeing a lot of those stocks like IDRA, etc., starting to break out, and then the rug got pulled out from underneath everyone. When we're in the early days of a bounce, you want to confirm that the bounce is real. You try different things. At least that's what I do. I want to see myself miss some plays. I want to see plays where I'm hesitant because of the market, and then they run and I go, you know what? I was right about that stock. That's another one I was right about that I did not take the trade in. Okay, I need to start looking more closely at the stocks that I think are going to bounce. That's the kind of strategy I have going into a week like this. Let's go over some charts though. MLND looks like a nice little bottom here on Friday, double bottom on the chart. The reason I really like MLND, aside from the fact that it's a merger play, is its cash. If you're new to my videos, one of my favorite trading ideas when it comes to stocks, and it usually is biotech stocks, is the cash balance they have. These guys are trading at a 50% discount to their last published cash balance. What that essentially means is if you went to someone's bank account or you went to this company's bank account and they had $38 million and you were able to buy up the entire company, it would only cost you $19 million. You could close the company. These are all theoretical talking points, though, and walk away with $19 million in cash. That's the way these cash-rich plays work. These guys also have a merger upcoming. The vote is in June. This should start to move very, very soon, and the cash balance on this one makes me very, very comfortable sitting on this in my swing. UAMY. Every week we say it's been 84 years. You know, some companies just suck when it comes to publicizing their research, especially this guy that does nothing but tease. They give us information. Yes, we have a potential contract with the U.S. military. We're sending test samples to Ambry. We're going to have results in 3 weeks, and 5 weeks go by and it's crickets and nothing from this company. Their website looks like, I was going to say my 10-year-old designed it, but then it would actually look good. It looks like someone like me designed the website. That's how old it is. Unheard of. But, you know, that is the problem you deal with a lot of companies. The potential is really, really there. You just need these guys to wake up with press releases. Now, looking at the chart here, 200-day moving average, we're right there for a nice bounce. Freedom would be a move over 88 cents. So, you know, it's getting tighter and tighter down here. This stock should not be trading down here with the EV movement that's underway, with the pieces of information these guys have teased with us. This stock, in my opinion, should not be down here. So I'm going to continue to be patient and hope these guys finally get their press release act together. ITP, exact same story. Now, these guys have been teasing us since January about the FDA approval of their masks. Now, granted, we don't need masks as much here in the U.S., and, you know, the people who didn't wear masks anyway don't have to wear masks. I mean, masks are going to be needed for a long time. So hopefully we'll get that press release from these guys. Maybe this is the week. What would I be looking for an upside? You know, if I got 60 to 70 cents on this one at this stage, I'd be happy. I'd be dancing in the streets going, yeah, finally. After a million years, they finally put out the press release. So downtrend break, 50 cents. We are starting to see the pennies get some good movement. Some volume is starting to come down to these stocks. What I'd really like to see is the large cap stocks stop with their 200 and 300 point up and down moves every day. If we just had a flat large cap market, we would start to see more and more volume build in these kinds of stocks. FAMI, decimated by that garbage offering there a couple of weeks ago, but it's put in a very, very nice bottom here. We got a good support level at 35 cents. 20-day exponential, which is a favorite target of mine on these deep oversold bounces, is at 58 cents. RSI is still in the toilet, but as you can see here, we're about to get a positive MACD cross. Stochastics, you know, are setting up nicely. Now, the last time we saw a positive MACD cross on this stock was back in March, and it went on a crazy move over the course of a couple of weeks. So let's see if we can see a similar move on this one near term. ACST, merger play. We finally got that merger news, but it was in the middle of the small cap route, and it popped and came all the way back down. Now, everyone's talking about, you know, the May 10th, 11th, NASDAQ listing clock was up for them. As I've mentioned, in my eyes, they have the perfect excuse now to get a extension. Not that it was going to be hard to get one as it was, but now they've got the merger. So I do not believe delisting is any kind of issue on this stock right now. What are we looking for? I added back my swing on this one. Why not? You know, it's down here. Pennies could wake up, and they were chasing this at 65 cents in pre-market a couple of weeks ago. So break 45, 47 cents. You can see here the 200-day on the 1 hour chart is 47 cents. You know, I'd be happy with, you know, 30, 40% on this one up to the 55, 60 level in the near term. VISL, Only reason I'm mentioning VISL is this is the kind of chart I'm going to be possibly looking for over the next few days. I debated grabbing some on Friday, but I don't like jumping into a lot of new swing plays on Fridays just because, as I've said, you don't know what the weekend's going to have in store for a lot of things. But nice little bounce back on this one. Bottom of its range. Could get a move up to 250 to 275. Now, the thing with charts like this, when you see these kinds of bounce levels, you absolutely must come into a play with stops in mind, especially in the early days of bounces. You are not going to be correct on all your bounce plays. You are going to have bounce plays that bounce down, not up. So you need to, at the early stages of a bounce market, make sure you have a stop loss plan in every stock you jump into. Now, the last stock I'm going to talk about today is KIQ. This is an infrastructure play. Talks are really starting to heat up right now. This is the small cap play of the infrastructure talks. Now, there is a lot of garbage that's not even infrastructure in the infrastructure bill. When they pull all that garbage out, kick is actually part of what will actually get money. You know, the money should be going to railways, broadband, roads, bridges, etc. This will be the play. And of course, if you're watching to trade this stock, the other stock you absolutely must keep an eye on, and usually ends up being the leader, is rail. So this is the stock, you know, you just keep them next to each other, and when you see one rock and roll, the other one's bound to follow. At least that's how I'm approaching that coming into this week. So as I said, I'm optimistic going into this week. I wanted to pick up some bounce plays on Fridays, but you know, it's prudent to wait until the start of the next week. With that in mind, though, we've had a lot of false starts on the bounces, so I want to see continued sustained bounces out there. I don't care if I miss a few plays. The whole goal is preservation and having a strategy and following that strategy, especially in markets like this. A dead market like we've had for the last couple of months, a big mistake a lot of traders make is they're just bored. They need that money, they need that juice, and when they see any sort of bounce, they continue or overbuy on a stock, and then when it turns down, they've got another loss after a slow, bad market, and it really does you no good mentally. Trading is a mental game, but going into this week, things look pretty optimistic. So enjoy the rest of your weekend, guys and gals, and have a fantastic evening, and see you all tomorrow. Bye.